Hey guys, stop everything for a sec. Listen super close to what I'm gonna tell you right now. Not tomorrow, not after you keep scrolling. Because this thing I'm about to explain in this video is stuff no big mainstream money news will ever show you. And by the time they finally do, it'll be way too late. Silver is at $81 an ounce. While I'm talking, just yesterday, in one trading day, silver jumped 7% up to $8,349. That was the biggest one-day gain since the big drop. In just 24 hours, silver's total market value added $340 billion. I'm going to explain exactly what caused it, what's coming soon, and why these next 17 days could totally change how you see this whole silver thing. I'm OG John AG, the real one. If you're here on this channel, you know I don't do fake excitement. I don't scare you. I don't sell dreams. I just look at real numbers and facts. Right now, the numbers are doing something wild that I've never seen in all my years. Most of you watching 75% aren't subscribed yet. Come on, fix that. Hit subscribe and write OG John AG in the comments. That stuff keeps this channel going, because the info I'm sharing is the kind big banks and news places really don't want you to know. Okay, let's get into it. This morning, silver's spot price is bouncing between $80 and $83. That's up 22% from the low of $63.90 on February 5th after the crash. Looks like it's getting better, huh? But step back and look bigger. Silver is still down 36% from its all-time high of $121 an ounce on January 29th. That's just how silver is crazy fast up, super hard down, and people keep it confusing on purpose. Gold is back over 5,000, around 5,340. The gold to silver ratio is between 62 and 64 to 1. Back at the January high, it was 30 to 1. It got way wider because silver fell harder. That's normal for silver, it makes everything bigger. But watch this. If that ratio starts shrinking back toward 50 to 1, it's not just good news. It's like lighting a fuse. Now here's the number that should have every Wall Street banker wide awake at 3 a.m. On February 6th, Shanghai silver closed at $8,155, while Western spot was $72. That's a $9.80 extra cost, 13.7% higher than the paper price in the West. Think about that. If paper silver and real physical silver were the same, and a futures contract really meant a real bar in a vault, why would anybody pay 14% more in Shanghai? They know something we don't. During the crash on February 2nd, that extra cost didn't go down, it shot up to 29%. Add China's 13% tax for taking physical silver, and the real extra cost hit 45.8%. Physical silver in China was almost 50% more expensive than the crashing paper price in New York. Paper was getting sold off hard. Physical was getting grabbed and held. Those two aren't the same market anymore. The gap is getting bigger every day, not smaller. So ask yourself this. If the paper price is fake, what happens when the real physical market says prove it? Keep that in your head. The answer is just 17 days away, marked on the calendar in red. If you've been watching this channel, none of this should surprise you. I told you weeks ago, watch Bitcoin. If it closes under 82,000, expect selling to spill into silver. Bitcoin dropped to 60 and 62 on February 5th, then bounced to 71,458. I said if Bitcoin tests 74,000, silver would too. It happened exactly like that. I talked about the 150 EMA on the hourly chart. When silver was over $100, I said if it closes below, expect support in the low 90s. We hit that level right on the nose. I warned the Fed chair nomination could push silver under 86. It did. I don't guess the exact bottom, no one can, but I tell you the important levels, the data to watch, and what could happen. Every single thing played out, just like the data said. So when I say the data is yelling right now, listen hard. It's louder than anything before. Let's talk real physical silver, because this is where it gets scary for real. Silver has been in a real shortage for 5 years straight. The total shortage is 820 to 900 million ounces, while yearly production is only 813 to 830 million ounces. The world has used more silver than made for 5 years. What makes this different from any other shortage ever? You can't fix it fast. 70 to 80% of silver comes as a side product from mining copper, lead, zinc, or gold. You can't just start a new silver mine and dump tons out. New mines take 7-10 years and cost billions. This shortage is built in, from how silver is in the ground, and it's getting worse. Right now, as you watch this, the United States Mint stopped selling silver eagles, They're gone. The 2026 ones aren't available. The mint for the biggest economy can't make its main silver coin. The CEO of Apemex, one of the biggest precious metals sellers in North America, said on record, the market is really stressed. American silver eagles are selling for $95 to $165 each. Spot is 81. That's 22% to 110% extra over spot. Normal extra is $5 to $8, not 90. But this one fact made me drop everything and record. The EFP spread, the cost to turn a paper futures contract into real metal, jumped to $110 per ounce. Normal average is 25 cents. That's 4 times higher. In all history, big moves like that only happen when real metal is super tight. Silver lease rates. The cost to borrow real silver jumped from 0.3% to 8% a year. That's 16 times higher. Lease rates only go that high when real silver is truly hard to find, when vaults are emptying and people holding it won't lend because they worry they won't get it back. Picture this. Paper silver dropped 36%. Dealers can't keep coins in stock. Extra costs are at crazy highs. US Mint can't make coins. Lease rates are going wild. EFP says turning paper into real is way harder and pricier than ever. Paper fell, physical rose. So again, which one is real? This gets dangerous, because in 17 days, February 27th, COMEX has a delivery moment not seen since 1980. COMEX registered inventory, the real metal ready for delivery, is 103.5 million ounces as of February 5th. In October 2025, it was 167.7 million. That's down 38% in 3 months. It's draining 785,000 ounces a day. If it keeps up to February 27th, maybe only 85-95 million ounces left. Do the math with me. March contract has 85,000 to 91,000 open contracts. Each is 5,000 ounces. That's 425 to 455 million ounces people could ask for against only 103 million available. That's over 4 to 1 mismatch. I know you're thinking most futures never go to real delivery. Normally only 2 to 5% do. But right now, normal is gone. February delivery just came out and broke everything. It showed 98% delivery rate, 18.72 million ounces, delivered out of 19.11 million open. 98%. This isn't a normal futures market anymore. It's turning into a place to grab real metal. January was wilder, 49.4 million ounces delivered. That's 7.27 times more than 2024. In 1 week in January, 33.45 million ounces left. COMEX vaults 26% of all inventory in 7 days. Here's the crazy part. On January 7th, JP Morgan handled 99% of all COMEX silver deliveries. One bank, 99%. When one place does almost everything in a tight market, that's a weak spot. And weak spots break. Let's do numbers nobody in news wants to touch. If just 25% of March contracts want delivery, and 25% is low now, that's 107 million ounces needed, against 103 million there. Super tight. Zero room for mess up. But if it matches January-February's 50 to 70%, that's 200 minus 300 million ounces wanted against 85 minus 103 million there. The numbers don't add up. Not enough silver in vaults for what's coming. This keeps me awake, because only 3 things can happen. 1. Deliver metal that isn't there. Impossible. 2. Pay cash extra to settle, which admits paper isn't backed by real silver, and the price on screen is fake. 3. Declare force majeure. The exchange says we can't do our deals. Last time that was talked about for metals was 1980 Hunt Brothers squeeze. Silver hit $50 then, over $200 today, with inflation. They changed rules, no new buys, only sells, to stop it. Question is, will they try again in 2026? With Shanghai as another price place, China limiting exports, and big countries quietly buying, will it work this time? Any of those blows up the paper market and could push real silver to over $100 overnight. February 27th, 17 days. The clock is ticking. Now 3 big things hitting this week. Not random timing. First, Japan had a huge political shakeup. Prime Minister Sai Takai won big. 316 of 465 seats, promising big spending and more debt. Markets call it Takahashi trade. Weaker yen, stronger metals like silver. third biggest economy voted for heavy money printing. Money is moving to real stuff, like metals. Second, Bitcoin is hurting, 68,400 to 69,900, down 46% from $126,000 high. Bitcoin and silver still move together. If Bitcoin holds above 75,000, good for risky stuff, and metals get bought. If it drops under 65,000, more selling. Some smart people I trust say 50,000 or even 38,000. If that happens, paper silver price hurts short term, but real basics don't change at all. The gap between paper and physical gets huge. Third, this could flip everything. CPI inflation number comes Thursday, February 13th, 8:30 a.m. Eastern. First 2026 inflation read, December, was 2.7%. Markets expect 58 basis points cuts in 2026. Fed kept rates 350-375. Some want cuts, jobs data getting worse fast. ADP 22,006.54 million claims. If CPI high, dollar strong, cuts delayed, silver pressure short term. If CPI low, more cuts expected, dollar weak, metals jump, right into March delivery mess. Thursday's number either keeps the tough story or kills it. No in between. One number, two totally different paths for silver. Set alarm, 8:30 a.m. Eastern Thursday. Three things decide if March 2026 is biggest silver month in over 40 years. All hitting now. Can COMEX handle March deliveries with that math? Does tough Fed story fade as economy weakens? Does China buying come back after Lunar New Year February 16, 23? Before holiday, January 1st, China limited silver exports to only 44 companies. They're saying silver isn't normal stuff, it's important resource. When governments limit exports, domestic prices 30 to 45% over world paper, buyers taking delivery 7 times more than last year. That's not guessing. That's getting ready. Now I gotta talk about this thing internet won't shut up about. Truth is, data backs some of it. The idea, paper silver market wasn't made to find real price. It was made to keep price low. COMEX futures let fake silver get created. No real metal. As long as no one asks for delivery, it works. Paper grows forever, price stays low, real shortages ignored. For years it worked. Delivery 2 to 5%. Nobody called bluff. But starting 2024, deliveries climbed. January 2026, 7 times last year. February 98%. Bluff called. Who? Not small buyers taking ounces, big groups, institutions, countries with setup to take millions of ounces. JP Morgan 99%, January deliveries, China restricting exports. Mints empty, lease rates crazy high. Pattern if you look straight isn't normal fix. It's big players moving silver quietly. Eastern central banks and big funds buying fast like they know something. West paper market doesn't see yet. Silver used in solar, EVs, chips, AI, military plus 5-year shortage and money history makes it maybe most underpriced important thing out there. By time this hits big news, move done. I'm not saying conspiracy, I'm saying data fits this. When numbers match idea, don't ignore. Watch. So takeaway, for you long-term physical buyers, 70% of you this drop changes nothing. You're getting real metal cheap during 5-year shortage. US Mint can't make coins. Dealers charge huge extras not seen since pandemic. COMEX low inventory into big delivery time. Third biggest economy voting big spending. Weakening money. You're not gambling, you're getting ahead of big price fix. Buy more. Paper cheap is gift ground and science fix it later. For traders, tech look daily RSI 4446 neutral. MACD 8.96 buy signal. Williams percent R100 oversold. Last time combo silver up 40% in 6 weeks. Down support 72.73, then 69.70, then crash low 64. Up resistance 81.30, then 85-88. Break that, speed picks up. Get back 92, we're rolling. Silver above 50-day average 75.65. Good, but below 20-day 93. Short trend not turned. 200-day 49.13. Says long bull run still strong, not close to breaking it. Open interest down to 143,188.6% drop. Weak players out, overborrowed gone. But March still 85-91,000 contracts. Your big spark. Watching daily till February 27th. COMEX inventory and delivery notices. If draining 785,000 ounces day, faults critical before March. Shanghai premium, if over 10%, physical tight confirmed, if to 20% plus, paper price useless. Dollar Bitcoin, if dollar drops and Bitcoin over 75,000, go. If dollar up, Bitcoin under 65,000, short paper hurt, but physical basics same. Physical screaming, Shanghai extras 14 to 46%, COMEX down 38% in 3 months. ETFs buying, lease 8%, dealers no metal, that's real signal. Paper flushed, open interest down 8.6%, margin calls. Bitcoin pull, that's noise. Crash from tariff worry, margin hikes. China selling, technical stuff. No basic changed, shortage same, supply same, demand same, mines same, physics same, only price moved. Tight real supply plus cleaned paper =sign setup for biggest silver jumps ever. Silver $32, February 2025, $121, January 2026, 278% in under year. Now 81, still 153% up year over year. Big long bull market. Crash was tech noise, tariffs, margins, computers, China moves. Tech stuff makes chances, doesn't change basics. Shortage year 5. China limits exports. COMEX low into key delivery month. US mint no eagles. Dealers huge extras. Lease rates generation high. In 17 days. COMEX may not meet delivery. Either deliver and price sits 75-85 weeks, or can't and 100-950 quick. No other way. February 27th. First notice day, 17 days. Thursday CPI 8:30 a.m. Eastern first piece. February 27th. Main thing. This is OG John AG. No hype, no fear, no dreams, just data. Data never louder. Watch data. Control risk. Stay calm. Don't look away next 17 days. What happens to end February? Could be talked about 40 years. If this helped you get it, subscribe, comment OG John AG. Share with anyone in this mainstream catches up. Window closed. Next 17 days, set whole year. Stay sharp.